Stellar XLM, not memes, real adoption. When everyone shouts by the dip, what will actually send $XLM flying next cycle isn't hype, it's real-world adoption. Stellar is quietly powering the next wave of tokenized assets, stablecoins, and real-world assets RWAs. This is how institutions move, and when the market wakes up, it will be too late to chase. What Stellar really is and why it matters. Stellar isn't just another fast and cheap blockchain. It was designed with a clear mission to connect traditional finance with blockchain technology, enabling seamless transfers between fiat and crypto. The secret weapon behind this vision anchors regulated financial entities like banks or fintechs that bridge fiat money into the Stellar network. Anchors handle KYC, AML, issue stablecoins, and allow real-world money to move in and out of the blockchain safely. When organizations want to issue tokenized assets, real estate, bonds, gold, or equities, they do it through Stellar's anchor model, creating tokens directly tied to real, verifiable assets. In Stellar's tokenization model, issuing account creates and manages asset supply. Trustline lets wallets hold and interact with specific tokens. Anchor bridges between fiat and blockchain. Tokenized RWA represents a real, on-chain version of a physical or financial asset. It's simple, compliant, and built for real institutions. Real-world adoption, not talk, real action. Stellar's momentum in 2025 isn't theoretical, it's measurable. Mercado Bitcoin, one of Brazil's largest exchanges, announced $200 million in RWA issuance on Stellar. Centrifuge is deploying RWA on Stellar with a $20 million allocation to tokenize income-generating assets. Stellar ranks number 2 globally in tokenized treasury issuance, processing for $0.2 billion in RWA payments each quarter. Over $515 million in tokenized real-world assets are now live on the Stellar network. The latest upgrade, Protocol 23, introduced parallel execution, boosting performance and cutting fees by up to 70%. This isn't speculation. This is institutional-grade utility in motion. Why this could send XLM skyrocketing? 1. Native utility, XLM as fuel. Every on-chain transaction, swap, and payment on Stellar requires XLM. As tokenized assets, stablecoins, and payments increase, so does the demand for XLM, turning it into the fuel of a growing financial network. 2. Institutional trust and network effect. When regulated entities, Mercado Bitcoin, Centrifuge, Franklin Templeton, adopt Stellar, it sets off a chain reaction. Trust breeds adoption, and adoption drives value. 3. Massive upside potential. Currently, XLM trades around 38 cents 41 cents, still heavily undervalued considering its network growth. If the RWA wave keeps building, a move toward $1, $2, or beyond in the next cycle isn't unrealistic. 4. Competitors are crowded. While Ethereum and Solana struggle with congestion and high gas fees, Stellar thrives in its niche, tokenizing regulated, small to medium value assets with low fees and instant settlement. The explosion scenario for XLM, Phase 1, Catalyst. A major bank, fund, or fintech launches a multi-$100 million tokenization project on Stellar. Or a payment giant like PayPal or MoneyGram expands their stablecoin rails on Stellar. Phase 2 accumulation. Smart money quietly accumulates as the market underestimates Stellar's institutional pipeline. Phase 3 network effect. More tokenized assets, more anchors, more stablecoin liquidity, all requiring XLM for movement and conversion. Phase 4 market awakens. As the world sees real assets, not hype, moving through Stellar, the market will finally understand what's coming. Real adoption, real assets, real value. This is how institutional finance enters crypto, not through speculation, but through infrastructure. And Stellar is already building it. So next time someone asks what's going to send XLM flying, Tell them it's not memes, it's utility. Want to know what sends $XLM flying next cycle? It's not memes, it's real adoption. Stellar is powering tokenized stablecoins, tokenization, and RWAs. With simplicity, compliance, and live on-chain utility. This is how institutions move. Market is about to wake up by the dip.